Good morning, this is Ron from Swiftic with today's Forex Rant, the internet's most exciting 5 minutes of Forex analysis. Let's go straight away to what we're watching today. First, we're going to have a little school lesson. When it comes to Forex trading, there's a lot of important things. We're going to discuss two quick things within Forex trading. The first one is a little rule I have over here. If you think something's going to happen, if you're in a trade and you really believe something's going to happen and it doesn't, it probably is not going to happen, and it's worth getting out of that position. The second important theme is that Forex traders, they really love clarity, and what they really hate is cloudy forecasts. What does this mean? It's that you could have some really bad news, but as long as traders have like a good idea of what's going on, you could still see a currency do really well. On the other hand, if you have you can have some really good news, but if things are still a little cloudy and no one has an idea what's going on in that country, you can have a currency do poorly. Those two themes are really important as we're going to take a look at the euro-dollar and the pound-dollar. Specifically, the euro-dollar was dropping yesterday as there are a lot of Italian worries. We're going to get to that in a minute. But we're going to focus first on the pound-dollar. And the pound-dollar rallied yesterday. It had this nice little rally. It wasn't like a mega rally, but it was a nice little rally. Even as the Bank of England had their inflation report, and Governor Mervyn King was out testifying about England, and overall his words were terrible. You know, what did he say? He went out and said that the UK is doing he's worried about productivity in the UK. He's worried about that the problems in the EU are going to affect UK banks. Growth in Asia is a problem, and he even highlighted that the Fed was getting worrisome. He basically said that things in the UK are not doing well, the forecasts are terrible, and we're probably going to have some more quantitative easing and possibly some lower rates. And even though he was so negative, we still saw that the pound dollar actually did pretty well. As you can see from this chart, we saw the pound dollar was like around the 156 levels. 155, a little below 156, and as he was talking, it just kept going higher up to like 156.60, 156.50 or so. And why did this happen? So traders, even though he had all this news, the fact that the Bank of England was basically saying we're going to be really proactive, we're going to make sure to stop this, and we're going to apply stimulus if need be. So for traders, were encouraged by this, and this led to an across-the-board rally in the pound dollar. The reason I'm bringing this one chart up is you can see that even after the pound dollar had kind of like lost a little bit of its initial gains, it still went back up around its previous highs. And if you see that little red line that's above the green line, so that's we have this short-term moving average that's still doing better than that than the longer-term moving average, which shows that we still have this short-term momentum is holding up. Next thing, the euro-dollar. So we said if you think something's going to happen and doesn't happen, it's probably not going to happen. So we saw this in the euro-dollar. We had Italy was in the news yesterday. We had Banco Monte. I'm not going to bother explaining that. Basically, you have this 540-year-old bank. They decided it's too old to fail. There's a new one. And Italy went and bailed it out. There were also rumors that Prime Minister Monti was resigning, which he said he's not resigning. So we would have expected the euro-dollar to be falling apart. And it actually did. It hit a new low yesterday. It hit a new low of the week. Traded down about 124.35. But it bounced right back up to around the 125 level. So if you see this little chart here, we see that pretty much for the past several days, the euro-dollar has been in this little range, this consolidation range around 125. It goes up a little bit above it, below it. But there really hasn't been much of a move in the euro-dollar. Nonetheless, as we've shown this chart in the past, the euro-dollar is still below its trend. It's still, had this upturn that it broke, and it's below that trend, which, shows us that for traders, this means that we're still like a negative bias for the euro-dollar. So based on this, we have this euro-dollar that's not going anywhere, but still the negative view on the euro. So our thoughts over here is that we have this overall weakness in the dollar, which is seen in the dollar-yen, which is dropping back around 79. Therefore, as the euro-dollar is not going anywhere, but we still have this overall weakness in the euro, our preference is possibly, instead of shorting the euro-dollar, maybe going into the euro-Aussie or the euro-pound and shorting those in order that you can still take advantage of the euro weakness. All right, my name is Ron. If you have a question, comments, you can email me.